Good morning, ladies and gentlemen, and welcome to the Brave Bison Group PLC 2020 full-year results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once these are ready for your review. I'd also like to remind you this presentation is being recorded. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Oliver Green, Chairman, Philippa Norwich, CFO, and Theo Green, Director of Growth. Good morning.
Good morning, everyone, and thank you for joining our Investor Meet presentation. I'm Ollie Green, and I'm the Executive Chairman of Brave Bison. I've been in my role now for the past 10 months, but I've been working in digital marketing and in media my entire career. Prior to Brave Bison, I was the Managing Director of Top 100 digital media and technology agency Tangent. I've worked with global clients like Amazon, SAP, LVMH, and Sky. I'd now like to introduce you to Philippa, our CFO.
Hi, my name is Philippa and I'm the CFO of Brave Bison. I qualified as a chartered accountant with Kingston Smith around 15 years ago, and I've worked in the marketing and advertising sector ever since then. I've worked at a mixture of independent agencies and big networks. I spent 5 years working at Albion, which was at the time one of the most successful independent agencies in London, and then moved to Profero, which was an independent network when I started, but which was bought by IPG, one of the big advertising holding companies, shortly after. It then subsequently merged with Mullenlow London, as well as absorbing another acquisition. I then moved to Tangent, which is where I first worked with Ollie and Theo. I joined Brave Bison initially on an interim basis in February last year and was appointed permanent CFO from the 1st of May. I'll now pass you on to Theo, our Director of Growth.
Good morning, my name is Theo Green and I'm the Director of Growth for Brave Bison. I joined the company in an executive capacity in mid-2020 and I oversee our media and M&A activity. Prior to Brave Bison, I was the Director of Tangent alongside Ollie and Philippa, and prior to that I worked for Brockton Capital, a private equity firm with around $2 billion under management, where we built a number of asset-backed operating companies, including Fora, a £500 million co-working business, and a data center business.
I'd also like to point out that on our board is Matt Law. Matt joined in February or March last year. Matt has phenomenal experience in the media and marketing sector, having scaled independent agency group Analog Folk from about 35 people to over 350 in multiple different markets. I thought it might be helpful to give existing and prospective shareholders some insight into why Theo and I have invested £2 million of our own money into Brave Bison. The group has a unique and innovative business model that combines high-margin marketing services with a fast-growing media network. We believe there is huge value in owning audiences and communities across social media platforms. These audiences can be monetized through advertising on the platforms, as well as through branded content and later commerce and subscription. Brave Bison is also in a prime position to support brand advertisers as they move their spend, or their advertising and marketing spend, away from traditional channels like TV and print and towards digital and social platforms like Instagram and TikTok. We charge advertisers a fee for our services, and the margin here is double digits. Private companies like Lad Bible, Little Dot Studios, and Social Chain are going from strength to strength. We have a reputation for being at the cutting edge of social media and have good relationships with all the major social platforms. We already have a global footprint across London and the fast-growing Asia-Pacific market. Theo and I are hugely excited at the prospect of building a public company in this space, and Brave Bison provides us with a platform to do so. From a financial perspective, we now have a solid foundation. Turnover is circa 15 million. We have net cash of almost 15 million and significant tax losses. This timeline depicts the story over the past 18 months. Theo and I built a stake in Brave Bison of circa 22% between June and November 2019. I joined the board of the business at the end of the calendar year. Shortly afterwards, Philippa joined as CFO from Tangent in February, and we then appointed our independent non-executive director, Matt Law. The pandemic then hit and caused disruption across our entire industry, but we got the opportunity to acquire leading youth media brand, The Hook, for £150,000 in June. At the same time, Theo and I took on executive roles in the business. We restructured the group and repositioned the business and saw positive momentum in the second half of the year. We were pleased to report an adjusted EBITDA profit of £500,000, as well as positive free cash flow of £600,000 in H2 last year. We've started 2021 in a good place, and trading in the first quarter has been strong, meaning that we have now been profitable on an adjusted basis for the past 7 months. Post-restructuring and repositioning, we view our business as having 2 core pillars: a social marketing agency and a media network. Our social marketing agency generates fees by working with global brand advertisers on social media-related marketing contracts. Annual spend for clients ranges between £50,000 and £500,000 a year. Current clients include Panasonic, Vodafone, and Uniqlo. Our media network, which my brother Theo is going to talk a little bit more about in a minute, consists of a network of social media channels, some that we manage on behalf of third-party rights holders, as well as some channels that we own and run for ourselves. The channels generate revenue directly from social media platforms like Facebook and YouTube, after advertising is inserted into the content on the channels. The advertising takes the form of a pre-roll ad break, a mid-roll ad break, or even a page takeover. I'm now going to hand over to Theo, who's going to give a little bit more detail around our media network.
So one of the most exciting things about Brave Bison is its exposure to this new form of media that has captured the time and attention of young people. YouTube, TikTok, and Snapchat are now the primary destinations for consuming content, and Brave Bison owns and operates a number of these successful channels. Young people are coming home from school, and instead of switching on the TV and watching The Simpsons, they're logging onto YouTube and watching their favorite personalities. Brave Bison's network of hundreds of channels reaches billions of people on a monthly basis. Our audience is engaged, and it's young, predominantly Gen Z and millennial, and mostly located in the UK, the USA, and other English-speaking countries. When people watch our content, they are served a short advertisement, which in turn generates revenue that we share with the social platforms. We also work directly with some advertisers, such as the BBC, who buy advertising through us on our channels, generating a greater margin. Our YouTube channels generate the most revenue for us, followed by Snapchat and then Facebook. TikTok is incredibly exciting, but it is not yet monetized. We nonetheless continue to build our audiences on this platform. Our most popular channels, such as The Hook, are cross-platform, meaning the same brand has audiences on multiple different platforms, giving advertisers a more comprehensive offering. So as I said, YouTube is our biggest platform in terms of revenue. On YouTube, we partner with content owners, such as sports federations or content libraries, and run the channels on their behalf. We take a share of the revenue that the channel then generates, sometimes as high as 50%, and our partners are tied into multi-year contracts. Current partners include the PGA Tour, the US Open, and Comic Relief. On Snapchat, we have a very different way of working. Here, we license the content and curate the content around specific verticals such as men's grooming, tattooing, and fitness. And we create shows that are specifically commissioned by Snapchat. This keeps our costs low and means we keep more of the revenue generated by our own IP. Snapchat has seen huge growth over the past 12 months. The platform has become an excellent way for advertisers to reach young people, primarily in America. The numbers are absolutely staggering. 75% of 13 to 34-year-olds in the USA are using Snapchat every day to watch content and chat with their friends. The first thing to note about TikTok is that it is an unmonetized platform. So why do we bother publishing our content here? Firstly, because it may well be monetized in the future, and we are keen to build our audience for that time. Secondly, because TikTok allows us to reach the most enormous number of people. We then use this reach to build our platforms and direct users onto other channels that exist on monetized platforms, such as YouTube and Snap. Our flagship content series for TikTok is called The Wave House. It's a reality series featuring 5 personalities who are famous on TikTok, competing in challenges to win prizes. The Wave House was launched simultaneously on YouTube, TikTok, Snapchat, and Instagram, and individual posts can reach over 15 million people. Interestingly, a similar concept in Los Angeles has recently been picked up for a Netflix series as a result of its intense engagement with its audiences. The Hook is our flagship channel, and the brand exists across Facebook, Instagram, and TikTok, as well as having its own website. The Hook is an entertainment channel, featuring the kind of celebrity and news content preferred by youth audiences. We acquired this brand out of administration in May 2020 for £150,000, and it's been integrated directly into our already existing publishing platform without the need to retain any of the company's existing operations. This gives you some idea for the opportunity to scale our business through tactical M&A. Ollie will now spend some time talking about our social marketing agency.
Thank you, Theo. We like to refer to our agency business as Brave Bison Studios. To recap, this is where we work with brand advertisers for a fee, and client spend ranges from between £50,000 a year and £500,000 a year. As part of our service offering, we can provide one-off consultancy and the production of content to retain social media management and the management of media across various different social platforms. We have the ability to win large-scale projects that drive our top and bottom line, as well as deliver more tactical, high-margin work in specific areas. We're particularly excited at the prospect of growing our influencer marketing services. This is where we work with talent or creators on platforms like Instagram and TikTok to promote branded content or brand messaging. Clients or advertisers work with us because we're experts at identifying the right creators or the right influencers for the right campaign. We're essentially selling access to the influencer's audience as well as the production of content. Influencer marketing is growing rapidly across our industry. It works for our clients in driving brand awareness as well as sales, and it works for us given the high margin associated with running campaigns and brokering deals between talent or creators and advertisers. As you can see from our advertiser or client wall, we work with a number of tier 1 global brands, and lots of our work has a global remit. We typically work with clients in the B2C space, but more and more are focusing on 3 core verticals: e-commerce, tech, and gaming. The image on this slide is from a campaign that we ran with Vodafone's youth brand, Voxy. Voxy came to us to help promote their new unlimited data plan. We used influencers across Instagram, YouTube, and TikTok to promote that new plan. The image is of an influencer called Blue Hydrangea, who has almost 400,000 followers on Instagram. We also ran an influencer-led campaign for Lark, which is part of a company called ByteDance, the Chinese technology company that owns TikTok. Log is a collaboration software that we helped to promote by teaming up with two celebrity influencers keen to help small businesses during the lockdowns last year. Philippa is now going to talk through our annual results for 2020.
Thanks, Ollie. This slide shows some of the headline numbers from our 2020 results. You can see that both our advertising revenue and our advertising gross profit increased during the year, with revenue increasing by 6% and gross profit increasing by 7%. We did see advertising revenues take a significant hit in April and May, as advertising budgets were either cut or paused as a result of COVID and the initial lockdowns. However, we saw these recover strongly in the second half, with revenues from YouTube and Snapchat in particular going from strength to strength. Creative services revenue and gross profit was down on the previous year, with gross profit dropping from 2.4 million to 1 million. This has historically been heavily driven out of our APAC office, which was impacted by the pandemic right from the start of the year. A lot of the budgets in the region were also linked to the Tokyo Olympics, with the result that they were shifted out of 2020. The positive news from the results is that despite the impact of the pandemic and resulting drop in gross profit overall, we were able to show an adjusted EBITDA profit of 133k. I thought it would be helpful to show the results on a 6-monthly basis, as this demonstrates the trends over the last 18 months. Gross profits increased by 19% from H2 2019 to H2 2020, which was driven by the strong advertising growth already mentioned, and also by new client wins in H2 2020, such as Vodafone, BBC, and Suntory. In addition to this gross profit growth, the restructuring carried out in 2020 saw us make significant cost savings. The new structure and reduced headcount allowed us to reduce our monthly run rate of staff costs by roughly 50% over the course of the year. We also carried out a full review of all other costs, such as IT costs, subscriptions, etc., and negotiated discounts or stripped out costs in order to make further annualized savings of around 150k. The overall annualized savings from the restructure are in the region of 1.9 million, and that's excluding any one-off savings like rent discounts. You can see the impact of this in the graph showing the change in adjusted EBITDA over this period. This has improved by 1.2 million from H2 2019 to H2 2020, and the margin has shifted from a negative 37% to a positive 24%. Before I go on to some of the detail of the 2020 results, I wanted to give a quick trading update for the current year. There's no doubt that we have started 2021 in a much better shape than 2020. We have a clearer proposition, a streamlined new operating model, and costs which are appropriate for the size of our business. I am pleased to report that Brave Bison has now been profitable on an adjusted EBITDA basis for the last 7 months. Our trading in the first quarter of 2021 has been strong despite the lockdowns. Historically, Q1 has been the worst performing quarter for us due to the reduction in advertising revenue after the busy Christmas period, so it is particularly promising to see a profitable Q1. We've also had a good start to the year in terms of new business. Already this year we have won new business from CPLT 20, Line, Samsung, Suntory and Vodafone, among others. And we have a strong pipeline we hope to convert over the coming months. Going back to the 2020 numbers, this slide shows the reconciliation between the adjusted EBITDA discussed above and the loss before tax. There are a few key items to pull out. Firstly, there are the costs associated with the restructuring of 718k. The main point to make here is that we don't anticipate there being any further significant restructuring costs in the current year, so that shouldn't be repeated. The impairment charge of 248k during the year related to the right of use asset associated with the office lease. We impaired this as a result of the impact of the pandemic. This impairment means that in 2021, the group will only bear market rate property costs. These property costs are largely sitting within the depreciation number, so in 2021 we will see that reduce significantly. Another one-off item to call out here is within amortization. 608k of the 848k amortization number relates to accelerated amortization of customer relationships. These assets were acquired 5 years ago, and we reassessed their useful economic life to be 5 years rather than 10 years during the year, with the result that they were fully amortized at the year end. This slide shows the group's cash flow during the year. We ended the year with a healthy cash balance of 2.7 million. This did reduce by 1.5 million during the course of 2020, and there were 3 key drivers of this. Firstly, there was the payment of the restructuring costs of 718k. This was a large part of this, equating to 48% of the cash outflow. A further 11% related to the purchase of the assets of the Hook. A further 36% related to revenue share payments that would, in the normal course of business, have been made in 2019, but were delayed to 2020 at the request of our partners. In the second half of the year, we saw cash inflow of 683k, which reflects the improved operating performance and healthy cash conversion. I think I've already touched on a lot of the key items to mention in relation to the balance sheet. In non-current assets, the only remaining intangible asset relates to the acquisition of the Hook, while the vast majority of the property, plant and equipment is the remaining impaired right-of-use asset relating to the lease. Our lease ends at the end of September 2021, hence why we no longer have any non-current lease liabilities on our balance sheet. The trade and other receivables number has increased from 2019. This is largely because of an increase in advertising revenue from the platforms in December 2020 versus December 2019, which means that the level of accrued revenue at the year end are higher. The only other amount to mention here is the bank loan of 50k. This is a bounce back loan which we took out during the year, which is interest free for 12 months. I'll now hand you over to Ollie and Theo to talk about our growth and acquisition strategy.
Thank you, Theo. This diagram depicts our current business as well as an expanded model. On the left-hand side, you have our current digital and social capabilities that exist within our social marketing agency. But you also have new capabilities that we're keen to develop. These include commerce, search engine optimization, and conversion rate optimization. On the right-hand side, you have our existing network, including our YouTube channels and Snap shows. But you also have additions to the network, such as podcasts and Instagram communities. We're really keen to expand into new verticals and content niches. The business model for the left-hand side will always be fee-based income. The business model for the right-hand side is a combination of advertising and branded content, as well as direct-to-consumer, with things like subscription and commerce coming into play. What we're trying to create is a flywheel for growth, as one side feeds the other. The bigger and more engaged our audiences on our media network are, the more relevant they become to brand advertisers that are already buying from our digital capabilities. Similarly, the teams that we employ to service our clients will help to build out and optimize the digital experiences of the media network on the right-hand side.
So we're actively targeting acquisitions on both sides of this media and marketing flywheel. I think from a marketing services perspective, what we're looking at acquiring are those really in-demand digital capabilities, things that from talking to our existing clients and from understanding the industry, we know people are out to buy. Particular areas of focus for us at the moment are performance marketing, SEO, and Amazon marketing. Similarly, we're looking to double down on our presence in influencer marketing and social media management. Also of interest is acquiring media assets that can be monetized today through advertising and monetized tomorrow through direct-to-consumer content and commerce sales. The key here for us is finding truly engaged audiences that are relevant to their viewers. We would expect to spend between 5 and 15 million pounds acquiring a marketing services business and 2 to 10 million pounds acquiring a media asset or group of media assets. From an integration perspective, Marketing services businesses will be integrated based on capability and client fit, but all our marketing services will share common HR, IT, finance, and office space where possible. Similarly, media assets can be plugged into our existing publishing and audience development operation. This is something that we've already achieved successfully by buying The Hook and would look to repeat further.
This slide outlines our largest shareholders. Obviously, our largest shareholder is Ollie and Theo, which means that management's objectives are very much aligned with shareholder objectives. We then have Ross de Leon, who is a private investor, followed by CIP Merchant Capital, which is a more recent institutional investor. We then have Simon Davies, another private investor, and MMC Ventures, which is a venture capital fund.
We thought it might be helpful for prospective investors on the call to outline what we think are the top 5 reasons to invest in Brave Bison are. Number 1, our committed and experienced management team with skin in the game. Number 2, the digital advertising market is growing quickly, and Brave Bison is extremely well positioned to benefit from advertisers moving their spend away from traditional channels and towards social and digital platforms. Number 3, our fundamentals, including our balance sheet with net cash of 2.7 million and the fact that we're now trading profitably. Number 4, we're already global with a footprint in the UK and across the Asia Pacific market. Number 5, Brave Bison has a clear plan to build a much bigger group by growing our existing business and via making targeted acquisitions.
Fantastic. Thank you very much indeed, Oliver, Philippa and Theo. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the team take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the team, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Just before we go on to the live Q&A, guys, we did have a pre-submitted question, and I think you covered some parts of this off in the presentation itself, but if I may just read it out to you, and if there's any further colour you can add, that would be great. It reads as follows: you state you have 3 core pillars: a social marketing agency, a network of YouTube channels, and a portfolio of social media brands. Can you run through the business model in each vertical, the target split going forward, and the visibility of revenue you have? You have a great revenue number. I'm just trying to understand the compilation of the business model.
Yeah, so I can answer that one. I think we probably covered off the business model part of that question during the presentation. But if I quickly run through them and talk about the visibility that we have and also what the split is looking like for 2021. So firstly, the social marketing agency, as we said, that's a fee-based business model. There might also be some performance-related elements for some projects. For instance, if we were running an influencer marketing campaign, we might be partially remunerated on the basis of targeted conversions or such like. The visibility in this part of the business varies significantly. With some clients, we're in conversations about 4-year deals, while other projects could come in and be completed and turn around within a few weeks. I'd say we probably have pretty good visibility 3 months ahead, and then, like I say, some underlying retained clients as well. With our YouTube network, the business model is on a revenue share, which can be as high as 50%, depending on the level of services provided. Visibility on this is pretty good because, as Theo said before, our partners are often on multiple year contracts, generally 2-year initial deals, which then renew for 12 months at a time. Obviously, the views and CPMs do fluctuate on a month-by-month basis, so the revenue will go up and down, but we know that there will be revenue coming from those channels each month. For our social first media brands, we can generate revenue in a number of different ways. Currently, it's primarily via advertising revenue from the platforms and from our websites. It could also be from brand sponsorship of the shows. And as mentioned previously, we're looking at subscription and e-commerce as potential revenue streams in the future. Again, visibility on the core advertising revenue is pretty good, subject to some monthly fluctuations. For 2021, I think the gross profit split between these three areas is likely to be around 30% from the social marketing agency, 40% from the YouTube network, and 30% from our media brand. So it's a fairly even split.
So there's a couple of questions that I've seen come through about, I guess, acquisitions and how we plan to fund them. I think it's important that sort of from the outset, we're very clear in terms of we are trying to build a substantially larger business, and that will be through accretive acquisitions and raising new money. We're very excited to bring new investors and new institutions into Brave Bison, and as and when we have opportunities to go out and do that, we plan to do so.
I think it's as well worth saying we're keen to be selective with our M&A sort of process. The marketing and media space is very fragmented. There's many companies operating in our space. We're keen to find ones that fit with our business, have the right teams in place, and have the right propositions.
Guys, thank you very much. If you wouldn't mind just clicking on that Q&A tab, and Theo, thank you for picking up some of those questions. And if I may just ask you to read out the question where appropriate to do so and give your response, that would be fantastic. Thank you.
Sure. So I have a question here that asks, how fixed are our operating costs? Will they need to increase significantly to support growth? So I think the answer is that our operating costs are not massively fixed. There absolutely is flexibility because a big part of our operating costs are people. We employ talent across all of the parts of our business, either to create content or license content for our network of channels and our media network, or talent to actually win clients and deliver work for new clients. And so we don't view those costs as necessarily being fixed. Those costs go up and down in line with revenue. Philippa, do you have anything to add on whether or not our operating costs are in fact fixed?
No, I think that's absolutely right. I mean, there's an element of fixed costs in being listed on an AIM network. I guess that's one key element, and that's one of the reasons why scaling is going to be important to us. So those costs are less significant. But yeah, otherwise we're fairly flexible. We have a very flexible cost base.
A question that asks, what's our strategy for international growth with your clients as they look like global brands? How do you transition into other markets? So you're absolutely right. We do work with tier one global brand advertisers. So much of our work that we carry out is across global markets. I think that our footprint in the Asia Pacific market is incredibly exciting. I think that parts of that market are slightly less developed than the UK and European markets. And as a result, advertisers really lean on partners like Brave Bison to support them with social marketing and media activity. And so I definitely think that we will be doing more within our Singapore base, or from our Singapore base rather, over the next 6 or 9 months.
I can see a question. Will you need to spend significantly on IT to develop your capabilities? I think that this is a very interesting one. I think we are not a tech company, and we are not pursuing a serious capex in this space. Where we think this is an interesting opportunity is to build a tech layer. So something that we don't sell to customers, but something that allows us to do work faster, better, and cheaper than our competitors. I think we're very lucky to be in a period of time where an immense amount of capital is flowing in to build tech platforms in our space. And I think we're keen to be customers of those platforms, not compete with them. We don't foresee selling a tech product to our customers. We foresee using a tech product for ourselves. We do have some proprietary IP that's been built over the years, but we don't see that as a significant investment going forward.
Yes. It's worth just adding that we license a number of different products to gain insight into social trends and also to look at the performance of various campaigns. And that tech is actually often white labeled. And so our clients and partners understand it as Brave Bison's technology, but actually the development is being done by probably a VC-backed company that has raised tens of millions to plow into their product, and we get to use that product for a license fee, which is fantastic.
I think there's a question here which asks us to clarify what the market consensus is for 2021 EBITDA. I think at the moment we're assuming the market consensus is in line with the forecast which our broker put out at the start of the year, which was around 600k adjusted EBITDA for the year. There's also another question on organic growth rates and what organic growth rates we are targeting. I think overall between 2020 and 2021, we're looking at somewhere between 10 and 15%. Obviously, we're targeting the higher end of that. But yeah, that's what our current forecast is looking like.
There's a question here about valuation expectations for M&A and how we would look to structure deals. So I think that we are in a very hot space, and in some instances valuations are quite toppy. But there are also instances where there are opportunities to plug in really interesting businesses to our platform. I think that the Brave Bison brand and Brave Bison ecosystem represents an enormous opportunity for businesses, founders that are looking to scale their own businesses. We have a global client base. We have offices across 2 different locations. We have our social marketing agency as well as our media network, which is a very rare sort of combination. There are lots of agencies out there and there are a couple of media networks, but very few businesses have been able to combine the 2. And so actually, I think from a sort of growth perspective, we're actually a very attractive partner to founders or businesses that are looking to scale their own business by becoming attached to us at some level. In terms of how we would look to structure deals, there's obviously a sort of a range of things that we could look to do. I think we're certainly looking to tie some founders in some instances. In others, we're not. But we would assume there would be a cash and shares element to most transactions. Okay, thank you for all your questions.
That's great. Thank you very much indeed. And thank you for answering those questions you can from investors. And of course, if any further questions do come through, the company will review all questions submitted today and will publish responses where that's appropriate to do so. Oliver, perhaps before we redirect investors to give you some feedback, I could ask you just for a few closing words just to wrap up, please.
Yeah. Well, thank you to everyone that dialed in this morning. We appreciate your time, and I look forward, along with Theo and Philippa, to updating you all over the course of the next 6 months or so. Thank you very much.
Oliver, Philippa, Theo, thank you very much indeed for updating investors today. Could I please ask investors not to close the session, as you'll now automatically be redirected for the opportunity to provide your feedback. If you've accessed this meeting from our website, the feedback page will appear in front of you. If you've accessed the meeting via the link sent out to you in the email, you'll simply be asked to log back in to submit your feedback. It takes just a couple of minutes and it'll be greatly appreciated by the team. On behalf of the management team of Brave Bison Group PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. Thank you and good morning.